The following is an excerpt from an askSlim member video. Subscribe to our channel on YouTube and share it. We put tons of new videos out every week. Like this video, give it a thumbs up, and follow us on Twitter at askSlim. Email matt@askSlim.com and request a demo of our technical analysis services, trade planning tools, and amazing video workshops. Our services support all trading and investment styles. Please do enjoy this video. So now we're going to look at the stock market. We had looked for the stock market to pull back, and our targets were 2775 in the S&P 500, 2670. I'll show those to you. And as we said in the beginning of the show, we don't think that this downside is going to last, and there's more on the upside. In this upward correction in what I believe is a significant bear market. So let's take a look here as we switch over to SPX. And we're going to look in here at the cyclical patterns. Again, now we're focused on the what is a dominant pattern right over here at about, it runs 18 to 20 days. You can see in here this bottom, it was 20 days off of the previous low. And this one was very short at 16. Part of that was because the intermediate pattern bottomed early. And I showed that also in Thursday's video on the big picture of the stock market. So you got this 19-day pattern right in here. Now you also have this middle, the smaller minor cycle pattern. This was the low of that pattern right over here, and that was at 8 days. So where we are right now is this was an 8-day low. So that's like 16, right? We're in day 17 here. The question is, are we going to be in 16-day cycles now? Well, it's not likely. It's more likely it's going to fall one more time and take out this low. Our projection was to test this area around 2770, 2775, and it got right down to it and bounced. I want you to note that momentum is still positive in here, though it is weakening. As you see that, it may not be enough to lose this upside momentum. It's not as key if we lose that. Then what would be key if we broke 2727. You could see that right there. And the note that we have, if it breaks that, it would be an indication of the intermediate top. That would mean that the next rally, which you can see projected here, would be far less likely to take out this level here at that last high that it made, which was at around 29.55. So if it holds above this level here at 27.27, which it's looking like it will, right? Then the likelihood is it will take those levels out, and maybe even get to 3,000 in here before it then succumbs to what we think is a lot of weakness out starting in June into the early period of August. So this is very key. If they really start to sell them again and you take out 27 in the next few days, well, then you know that there's more trouble. If they hold in these areas and then start to move up here, well, then you know that this upward rebound that we're in is intact. I'm going to say I believe it's intact. And like I said in the beginning of the show, I believe that the techs are not going to lead anymore. Healthcare is not going to lead anymore. And they're going to start to rotate and look at things that look like a bargain to them, which are financials. So that's what we're going to look at. We're going to look for the leadership to change. We're going to see if that helps the market. We're going to see if these key levels break. And we're going to see if the formation remains as it is now, which is positive, though certainly looking like it's stalling, what you see here in this last couple weeks. So again, our targets in here are really a range over the next 1 to 2 weeks, which are a potentially low of about 2770 in here, and then a potential high moving up to about 2960 to 3000 up in this area over here, all in the context of an upward rebound in a bear market. There's no reason to think anything other than that. And if you go watch our video, Big Picture Analysis on Thursday, you will see how I have supporting evidence to that. You think a new bull market started over here? Well, those of you that think that, I think, will be disappointed.